Everyone, and we're here to bring you a present, and that is tax savings, some tax write-offs before year end. I'm here with the illustrious Matt Sorensen, and we're going to talk about maybe writing off an auto before year end, some auto deduction strategies. Is it a good idea? What to look for? And then we're going to just do open Q&A. So if you've got a question about what tax write-off might work for you in the next 10 days, let's hit. Is it 10 days? 8 days? What is it, Matt? I don't know. How many
10
days?
you're in trouble, man. You're in trouble. It's going to be 2023 in 10 days.
Yeah, I'm starting. I'm starting Christmas shopping tomorrow, so I got to get on it.
Yeah. And, but seriously, December 31st, I mean, these are tax gifts, but a lot of these matter by December 31st. So we're at the 11th hour, so to speak, but this is a great time of year to be thinking about it. Maybe you're going to, have a December to remember and have a new Lexus, I don't know, in your driveway.
Yeah,
and a tax deduction to boot.
Apparently, some people get a new car in their driveway. I see the commercials. Okay, so let's give you the rules. I'm going to be sipping on my eggnog here.
Oh, love that. Do you go?
Yeah,
do you mix in any milk, or do you go straight? Is that?
I've got a little ice in it. It just kind of cuts it just a little bit, keeps it cold. But I got my props here. I'm going to be skiing later today, so I just want to let you guys know I'm working half days or more. But okay, let's hit it. So here's the number one issue, and Matt's got a hack. What do you call it? An auto hack, an auto loophole that many of you are going to love. But let me just set the stage with this. Every freaking year, I get someone that calls me, I'm not kidding, on my cell phone from the auto dealership and says, Mark, I'm down here buying an F-150 or this new Silverado or this new SUV. I need a tax write-off. Should I do it? What's my write-off? And I go, do you need an SUV or truck? Have you seen the gas prices?
Yeah.
You really need this? Well, no, but I want a write-off. And so here's my
what they want, Mark? They want a write-off. They also want permission from their husband or wife, whoever is here, the spouse, to be like, the CPA said we should do it. We're pretty much making money here.
Yeah, back in the good old days, I learned a hard lesson of not answering that because then I get hate mail from the spouse the next day. You're right. Like, what the hell? But anyway, so here's the theme. Do not let the tax tail wag the dog. Now, someone this morning asked me, what does that mean? That means we don't want to make a tax decision that could be good, going and buying a big old truck or SUV or even a car. I'm going to go through the numbers here. Yeah. You could get a really killer write-off. But is it a good economic decision? Are you letting the tail wag the dog, which apparently is a sweet movie, but we do not want to let the tail wag the dog. That's what we're worried about.
Yeah. But in other words, do it though if you are looking for a new vehicle, especially if you're in the market right now anyways. You're like, I could use a new business vehicle because you know what? In 2023, the rules aren't as sweet. So this is a little opportune time right now, I think, to really focus on this for any of you in the market, or you're thinking I got to do this next year.
No, if you make a poor decision, then you got to wear the naughty hat because we're going to have a problem. You're going to be in trouble if you go out and buy a vehicle when you really don't need it. So now what are the write-offs? Should we do that, Matt? Or do you want to let me give the write-offs and then you give your tax hack? Should we do that?
Yep. Let's do it. Okay. Let's hit the 2022.
Yep. This is the handy dandy Mark J. Kohler 2022 calendar. You can get to my website at markjkohler.com and get the 2023 pre-order. It is at the printer right now. And in here, I have a page that gives you all these sweet tax write-offs for small business owners. And all of you that have a side hustle or whatever, you got to get this. It's $25. It's got sweet, all the deadlines for the year. It's awesome. Okay, so here's the deal this year. This is a big deal. You're going to be able to take a $8,000. In fact, I've got even another an $8,000 bonus depreciation right out of the gate. So if you go buy, let's say this, okay, if you go buy a car or a truck or an SUV, you get what's called bonus depreciation, 100% of what your personal use of the car is. So if you're going to go out and buy could be new or used, could be with cash or credit, doesn't matter. It could be in your name. It could be in the business name. Does not matter. The IRS does not care. So let me repeat that, everybody. cash or credit, does not need to be in the business name, but you have to use it for at least 50% or more for business. Now, some of you are going to maybe go auto mileage because you don't use, you put on a lot of miles and you're like, I don't care if my business use is over 50%, I'm going to put on a lot of miles. But if it's over 50%, then you get this bonus deduction. And I'll give you the numbers here, and they're pretty sweet. But you got to be careful. The car and the truck and the SUV are going to have some different limitations. Matt, while I grab those numbers, do you want to hit the electric vehicle while we're on? I mean, that might be something sweet to get here.
Yeah. Now, here's another thing. Now, this was the Inflation Reduction Act, if you guys remember that. That wasn't really about inflation reduction, but it had some cool tax benefits in it for us. So one of which was the EV credit, the electric vehicle credit. Now, this does not necessarily, I'm going to give two versions of this. This does not need to be for business. The first EV credit is just government's incentivizing us to buy electric vehicles. Now, traditionally, the EV credit had to be for new only. You could only get the EV credit on new cars. But under the Inflation Reduction Act, starting in 2022, this came into effect in about August, there's an EV credit now for used cars as well. Now, there's a couple different requirements on this. So you want to be careful, make sure you're buying a car that qualifies, because it's got to have a certain amount of components and assembly in North America and stuff like that. So not all autos qualify. The best way to find out what autos qualify, by the way, is fueleconomy.gov. Fueleconomy.gov, you can look up the specific car you're interested in and see what electric vehicle credit is. Now, this is a tax credit, of course, so this offsets any federal income tax you owe. For the new, it's a $7,500 credit that you get. $7,500 for an electric vehicle. This is plug-in electric vehicle. For used, it's up to a $4,000 credit. Now, again, be careful on the cars you're doing. Go to fueleconomy.gov. You can see they even outline which ones can get which credit, or some can get partial credits even. Now, the nice thing about this was the government, the IRS and Congress, I should say, really said, let's expand this. The old EV credits would phase out. Each manufacturer got a certain amount of credits they could get. And once people bought enough of them, they didn't get any more. It was super confusing. Now they basically said, we're not putting a cap on it necessarily based on manufacturer, but it's got to have a certain amount built in North America. And we're also going to allow it for used, which is totally new. But
okay, now Matt, I'm starting to wrap a present here. Don't look, it's for you. But I'm going to start wrapping this present here, because you got to freaking hit the point. People, if you want an electric effing vehicle, do it through your business. That's the trick. Let's hit it.
Wait. Right? No, yeah? I don't want to get there yet. And while you're wrapping my present, is there keys in there, or what are we dealing with here? Is there keys? I don't know. Maybe a Tesla. Yeah. I don't know. Yeah. Well, here, let me say this on the EV credit, because I want people to know this. Some of you are like, I could just go grab the EV credit. If you're high income, you don't get this. 150,000 single, yeah. 300,000 married. You can't get this. The government's like, we're expanding the EV credit, but not for high income. We're getting rid of it for high income. But the hack, let me get to the point here.
Okay.
The hack is there is a business separate electric vehicle credit. It's called the commercial EV credit. And that is different. It's actually can go over $7,500, and you don't phase out if you're high income. There's other qualifying stuff there, but I just want to say for you that have looked at the EV credit, you business owners, you'd be like, I make too much money, I phase out. Consider the commercial electric vehicle credit, which if you use the auto in your business, it's commercial, and you can qualify. The credit can even be more than $7,500.
I love it. And I'm just, thank you for your patience, but we got a lot of questions piling up, because everybody, we're here for you. We're going to do live Q&A here in a couple minutes, but Matt was the one that really figured this out. And I loved it, because as soon as this law came out, they made it easier to get an electric vehicle, but it phased out for even middle income earners. That's my point, is it's not even high. The limits are not that great. So you're going to phase out and not get to get the credit with an electric vehicle. But for all of you, and you're our tribe at Entrepreneur, at KKOS, here with Matt Sorensen and Mark Kohler, you're small business owners. 40% of Americans now have a side hustle. Let's get that electric vehicle in your business. And now the write-off could be huge. So electrics go with the business. Matt, great summary. Here's your present. I will be sending this to you. I wanted to take care of that during our show today.
I think you're just a multitasker, getting stuff done. I appreciate it. Get that on Santa's sleigh, so it's there Christmas morning.
Yep.
I appreciate it.
Now here's the numbers. If you want to go out, and then we'll get into our Q&A. If you want to go out and buy a car, and your business use is over 50%, so you could buy a $40,000 car, new or used, let's say, and your business use is 80%. Okay, so that means you take $8,000 off the 40. So that means you have $32,000 of business car. Your car is 80% business, 20% personal. So if you have a $40,000 purchase, $32,000 of it can be written off. Well, in 2022, if you go buy that car this week, new or used, whatever, you can take a tax write-off in the car of $19,200 plus, moving forward, fuel, repairs, maintenance, all of that, and the interest on the loan can be a write-off, $19,200 right out of the gate. That's a $20,000 write-off. Boom. But you're not going to be doing mileage on that car. You can't switch back to the 62.5 cents mile rate. You're going to be just doing actual. Now, if you do an SUV or truck, that $8,000 plus the 11.2, which gets us at 19,200, that bonus of 8 plus the depreciation number, that's what I wanted to pull. If you do an SUV or truck that weighs more than 6,000 pounds, you can write off 100% of the business use again. So let's say you buy an $80,000 truck or SUV, new or used. That's one heck of a used truck or SUV, by the way. Weighs more than 6,000 pounds. Let's say it's 80% business use. So we're going to take off $16,000 on that $80,000 vehicle. That puts us at 64. So now you've got 64,000 that you can write off like that.
Yeah.
That's why I get a phone call from people at a car lot going, should I do this? Because they want that write-off.
Yeah. Now, do we miss some of this though in 2022? Like in 2023?
In 23, yeah, it goes down, doesn't it?
So, but it starts phasing down, but it's still good. But that's why we say, if you're on the bubble right now, get it done before 2022, because the amount of bonus depreciation you can take is going to start going down a little bit. Still there. But I love these strategies, the auto strategies. Again, we don't want the tax till the wag the dog if you otherwise need the auto or looking for a new car. But this is just, one of these, you can get the new vehicle that's a gift. Then you get the tax deduction benefits that's a gift. It's just the gift that keeps on giving, Clark. I want you to get something nice too this year.
Matt, I want to get something for you real nice.
Yeah, thank you.
All right. Now, final point here. We're going to go to live Q&A. Let me say this now. If you are a tax professional watching, listening, and enjoying this, please know that January 1st, I am launching my certified tax advisor. The Main Street Tax Advisor certification will start January 1st. I've already got signups and people ready to go. January 5th is our first live training. I'll be doing live training with all of my group every week, starting the first week of January, with over 79 videos. Little easy, don't stress out exams to be certified. And when someone calls and says, I need a CPA, Mark, because some of you watching this are like, I need a CPA, my certified tax network, they're going to be rolling off the shelf by the end of January, certified and ready to go on Mark Kohler strategies, which aren't revolutionary, but they're freaking street smart. So check that out. There's a link down below. So any of you enrolled agents, CPAs, tax advisors, financial advisors, and you just want to go next level on your tax strategies, get to that link below. The new calendar is in the links below. And please give us a like or subscribe if you're enjoying this. So, okay, now, James, let's go to our first question. Is that all right, Matt? You were going to say something?
Yeah, well, I was going to say one thing on the mileage. Remember, I think you got the update, right? Just the IRS announced mileage for 2023 is going to stay at that 62.5 cents. So remember, any of you that had auto use you didn't even buy a new vehicle, but 2022, you had use of your vehicle. The first half of the year was 58.5 cents. The second half of the year, yes, you got to break it up. Yes, this is weird. I guess the IRS has only done this a couple times. Like 2011 was the last where half the year was one rate, the other half of the year was the other. But 62.5 cents is what you're getting for the second half of the year, the last 6 months. But the mileage, remember, is an easy method. If you're like, guys, I'm not buying a new car, Mark and Matt, but I want to get this write-off for, my auto and travel. I mean, every 1,000 miles that you have, or I should say every 10,000 miles, I mean, that's 62 cents a mile. That's a pretty huge deduction that you're getting, right?
Yeah.
That's $6,200.
Yeah. And here's the rule of thumb. And I have an article that I produce and publish every January. You can look at my older article. I think Matt's Googled today and it came up number 4. Just type auto deduction strategies. If you add the word Kohler, it's number 1. But I'm number 4 there under a few ads. But I have an article there. We'll put the link down in the description. And I go through 7 rules of thumb. Because some of you are like, well, I'm putting on a ton of miles, but it's a lower cost vehicle. Well, stick with miles. With 20,000 miles, you're looking at a $12,000 write-off.
Yeah.
A realtor out there is going to burn 40,000 miles. So screw bonus depreciation. But if some of you are like, well, I don't put on a lot of miles, but it's really used for business and it's a higher value car, then you're going actual. And then I've got 5 other rules of thumb in there. So look for that article. It's down in the description. And okay, so let's live Q&A. Should we hit it?
Yeah, let's do it.
Okay, James in the studio, the team, Patrick, Alex, love you guys. Okay, what do we got, man? Yep.
All right, awesome. So first question is from PDR. Many people are advertising to simply buy a car in your business name and get you a 100% write-off for 2022, even if it's not used for business. Thoughts?
Oh, yeah, that's yeah.
We got lots of thoughts. I'm going to work on this cinnamon roll, Matt, while you take that first
okay.
That question. I mean, it's Christmas time. If anybody doesn't have a cinnamon roll within hand's reach, you got bigger problems. So
yeah, yeah, I got problems apparently, but not as many problems as the person setting up some business entity to buy a car and they actually don't have a business and they're not using the car for business. The IRS doesn't care. If you have a business and don't put it in your business, but you use it for business, it's still a write-off. The point is the auto needs to be used in the business. It's not about having a business entity and now you get to write it off. That's total BS. Whoever you're following or listening to there that's giving you that strategy, stop listening to everything else they say.
Yes.
That is dumb. That is a dumb idea. That's basically cheating the IRS. You got to learn the rules. So you have to have business use, and actually having the business entity doesn't make a difference one way or the other.
Yeah, I like it. I'm going to say this one more time. It doesn't matter if you have an entity. It matters how you use the car, truck, or SUV, or RV, or motorcycle. How you use the vehicle is all the IRS cares about. They don't care who owns it and if you have an entity or not. The person giving that advice to you is wrong. Here's what I'd love to challenge you to do. Email them and say, oh, that sounds like a great idea. Will you please personally guarantee in writing that that's acceptable to write off 100% of the vehicle if I put it in an LLC? Will you please put that in writing and I will set up that LLC with you tomorrow? Because that's probably what they're selling. They're trying to get you to buy an entity and go buy a car to get a write-off. Say, put that in writing. We'll see how quick they respond. I'll tell you right now, I put in writing all my strategies. I stand behind them. If you're like, Mark, you said it on your podcast, will you stand behind it? I'll write you a freaking letter. Now, I may make you be a client and pay me something to make sure that we have a client relationship. I think a Better Call Saul. I mean, remember that scene. That was an important scene.
Yeah.
When
give me $1.
Yeah, when Jesse and Walt are digging the hole for the body. They're digging the hole and they're like, he's like, hold it. You need to retain me as a lawyer. Put $1 in my pocket. Now he was tied up at the moment. And they're like, okay. And so they put $1 in his pocket. Now we got an attorney-client relationship. So anyway, I don't want to be by a hole out in the desert that you're digging before we get that relationship, but
yeah, and it's going to be more than $1 too. But you know what we're saying. He wasn't in a strong negotiating position there.
No, he was not. All right, he was not. All right, James, what's our next question?
So we're going to make this one into a question, but it's important. So one of our regulars, Quentin Mason, he says, I want a new C8 Corvette, exclamation, exclamation. Now, here's my question for that. Can he buy a C8 Corvette for his business, and what kind of business does it have to be for him to be able to write off a sports car like
now
that?
This is Corey. His name's Corey.
Quentin Mason.
Quentin. Sorry, Quentin.
He's a regular. Quentin. He's got all your books except for the first book, he says.
Okay, that's cool. Quentin, we got to make this work for you. I mean, this is a big deal. So I'm gonna put on my nice hat now. I'm gonna get legit. Okay, so I'm gonna be nice. And we're gonna pull this off, Quentin. All right, here's the deal. A lot of people think that if I wrap a car with advertising, it becomes 100% write-off. Wrong. It's how you use it. A lot of people think, well, if I buy a flashy car to get attention for my business, that's a write-off. Wrong. It's how you use the car. Now, I could have a dentist with a Corvette or a freaking Subaru. No offense for those that drive a Subaru or a Corvette for that matter. Somebody like, I'd rather have the Subaru. I get it. Okay, but here's the thing. It doesn't matter what make and model and the cost of the car. What matters are you using it for business? Are you driving around customers, employees, picking up supplies? I don't know how much you can pick up at Costco in a Corvette, but you might be able to get a few supplies. That Subaru with the hatchback, you might be able to get a lot more in there. So you may want to go with that. But the Corvette is not the problem. Spend $100 grand, $200 grand. I don't know how much shit cost. You're going to have limits, remember, on the depreciation. You can't write off the whole Corvette because it doesn't weigh 6,000 pounds. So whether I buy a Corvette or a Subaru, my maximum bonus depreciation is still $19,200. So be careful getting the Corvette thinking that you're going to get a bigger write-off. But can I write off your Corvette? Sure. Just tell me you're using it for business. If you're a realtor and you drive around people that own Corvettes, and Matt, can I take one more second? Is it cool?
Yeah.
I had a realtor that was so freaking fun. He had a Harley Davidson and he wanted to write off his Harley. And he was a realtor. And he said, Mark, I only take out my Harley when I show property. And he marketed himself to other Harley Davidson owners. And so, and he really had a good book of business. And he said, I'm gonna go out and market real estate to other Harley riders, and we'll go show properties on our motorcycles. So he'd be like, rolling into these open houses with their motorcycles, freaking Hell's Angels. These cute little realtors are like, what the hell's going on? Anyway, but no, he had a great business and he wrote off his entire motorcycle.
Yeah.
So Matt,
I think,
anything you'd add?
Yeah. So, I mean, that's a vehicle, and also think of, so Corvette, Harley Davidson, Sam Crow, Sons of Anarchy, they're driving around on their motorcycles doing business too, making deliveries of illegal guns and drugs.
That's a write-off.
That's a total right. That's a business use.
Okay. That's right. Did you know that there are criminal tax lawyers? They're criminals and tax lawyers. There are tax lawyers that help criminals, because guess what? All those drug runners and drug dealers, when they get in prison, guess who comes and narcs on their little bars? Hey, we're the IRS. We hear you made a bunch of money as a drug runner. We're going to tax you now. What? I thought it was bad enough I was in jail. Nope, you're getting taxed too. And so I got recruited to be a tax lawyer in a criminal tax law firm where they go in and help the criminals after they're in jail and the government seized all their assets, and now they owe the IRS. And they do get a write-off for that black SUV all murdered out, ready to go out and deliver. They don't get a write-off for the cost of goods sold, but they do get a write-off for the car.
Well, yeah, they certainly try, but okay. So I love that. The only thing I'll say on the Corvette is, and this is just a business decision. This is, if you love the Corvette, cool. And if it helps you sell more, or you want a certain image for your business or your brand, and maybe that matters. And like the Harley Davidson's the great example, because that person had an angle on the Harley, right? It was like, I'm going to market other Harley people. And I can see other people would love to go look at properties on their Harley. Like, we drive around, we roll up. I could see like that being a great little angle. Now, maybe it could be the same thing with the Corvette, but because the Subaru's half the price, you get the same, bonus depreciation here, this first year depreciation. There's a lot of other value there you're going to have to add in to say, does this help my brand, or is this otherwise just something I love? And I'm, you're spending more for that, I guess is what we're saying. Not enough tax bang.
Yep. Okay. Now let's go to, it is time. Ding, 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 ding. For the rapid fire time. We're going to try to rapid fire some answers here quickly. We got a bunch of questions. So James, you throw them quick. Matt, you are allowed only one sentence to answer that question, and the same rules apply to me.
Okay, I'm going to raise one objection here to this. I'm okay with the rapid fire, but let me just say, Mark and I were both tax lawyers for years doing consults all day long. Let me just say, I learned how to make something that takes a minute take an hour, because that's how you bill time. I'm just teasing. Of course not, but
all right. Okay, James, you hit us.
This question is from Toro Tommy Guns 45. Is there a limit on how many vehicles we can write off? Say I buy 5 Teslas for Toro rideshare.
Okay, Matt, is this one yours or mine?
I mean, you can take it.
Okay, Tommy Gun 45. Love your handle. This is not part of my answer. Okay, you can write off as many vehicles in your business as you want and that are used for the business purpose that you have created. You're good to go. Period. One sentence. Boom.
Yeah. Yeah. You think like UPS and FedEx, I mean, you know, they get to write off more than one truck, right? They're writing off all those trucks. So the bigger your business and the vehicles, bigger bang for your buck on the write-off.
Okay. Next.
We got Merrill Torado. Can we write off all miles every time we visit the state where our rental property out of state is, no matter how many times?
Matt?
Yes, as long as you have a business purpose for going there. Like, what is your purpose for going there? Like, are you checking on it? Are you showing a tenant? Are you making improvements? Is there repairs? So there's going to be unreasonableness if you're like just driving by, making sure the grass is cut and you rode off 2,000 miles or whatever there and back. Or I don't know how far. It's probably not that far to drive, but you know what I mean. So yes, as long as there was an actual business purpose for your travel to get there.
Write off as many times and as many miles as you need to take care of your rental. I don't care if you're going from New Jersey to Albuquerque, New Mexico. Little shout out to Breaking Bad. Okay, go ahead, James.
We got Chicago Pinup. She says, what are acceptable uses? And I'm assuming business use.
Okay, my turn.
Versus private.
Acceptable uses. Pinup Chicago. We'll leave it there. We've got acceptable uses for the vehicle. Running errands to pick up supplies, check on properties, meet with customers, meet with affiliates, meet with employees, pick up lunch, pick up equipment, visit another business location. Am I missing anything?
I'd throw in like go to a networking event or a business conference or training.
Love it.
Mark J. Kohler workshop, real estate tax summit, you know.
Yeah.
Self-directed IRA summit.
All of those are good business purposes. Commuting to your day job back and forth, not a write-off. Going to the movie theater, not a write-off. Going to the grocery store, not a write-off. Going to a baseball game to meet with a customer and go to a game, write-off. Going to the movie theater with your employee, write-off. Okay, we're good. All right, James, next question.
All right, car registrations and insurance costs by Tom Penny.
Matt?
Okay, so you don't have to have the car registered in the business name for tax purposes. Now, you may want to do this for those of you, maybe you're a contractor or you're got a...
This is rapid fire, bud, and I'm trying to work on the cinnamon roll, so work it quick.
I'm getting there, I gotta say. So for tax purposes, don't worry about where you're registering. Now, for asset protection, I might want it moved to put in your entity name if there's some liability, other people driving around. So for registration purposes, it can be in your personal name. Let your insurance agent know, though, that this is used for business use. The insurance agent needs to know so that you have the right insurance coverage. Insurance coverage for personal versus business is going to be different. So check with your insurance agent, make sure you got coverage for business use.
Okay, one sentence answer here too. I would say if you're asking if registration fees are a write-off or the insurance premiums are a write-off, they are only a write-off if you're using the actual method with depreciation. If you choose the mileage method, the mileage capture those write-off and you don't get to write them off on top of mileage. So it's either mileage or actual. Okay, James?
We bought a fifth, this is Jonathan Jobin. We bought a fifth wheel to live on site through the work week at a new commercial property where we purchased. We are doing a lot of work on site to get a couple of businesses started. Business expense? ?
Okay, well, I'm going to tell you right now, yes, some of you that are worried about my health, this is low-fat eggnog that I'm chasing down that cinnamon roll with, but it's December, and January 1st is just around the corner. I'm going to take care of this problem then.
Yeah. I am concerned, so.
Matt's like,
yeah, I don't want my business partner to fall over dead, but yeah, you live though. Just live.
Okay. All right. Now, everybody out there, I love this write-off. If you have an RV, a mobile home, single wide, double wide, whatever, and you're putting it at a work site during valid improvements during that time period while you're improving the property, it's 100% write-off. If you pick it up and go to the mountains or the lake, then you have to start counting use days, personal versus business, and go to a percentage write-off. But as long as you're using that fifth wheel for business purposes to park and work out of as a mobile office and tool shed while you're improving a residential or commercial property or whatever the hell you're doing, love it. Total write-off. Talk to your accountant. James.
Yeah, this is kind of a funny one. Dog Walker 69. Can I write off my subwoofers if I use my sound system on the construction site for the crew?
Absolutely. This is not an auto, but absolutely. I mean, that's equipment used in the business. That's going to be a write-off.
I'm assuming the subwoofers are in the auto itself.
Well, but that's not about transportation. It's being used to entertain, and it's being used at the work site.
Okay, I'm going to be technical here as an accountant. If those subwoofers are attached to the vehicle, then you're going to need to go with the actual method. So if you're doing mileage and you attach new stereo, a broken muffler that sounds way too loud. I've noticed a lot of broken mufflers lately. I need to go. I'm going to set up a nonprofit for young men that have broken mufflers. I don't think they realize how bad it is. So we're going to.
They need help. They need help.
Yeah, they need help. They need help. So now, if any of you want to attach something to your car, if you're doing the mileage method, there's no write-off. But if those subwoofers can be popped out easily, put on the work site for your employees, I'm writing off those woofers. And I would include a drone because you need to be able to look above at your project. Bluetooth accessories, cords.
Cameras on the job site. I mean, a lot of that stuff that people are using, absolutely, you should be writing all that stuff off.
In fact, I'm going to give you a legal tip here, everybody. A lot of clients that are doing rehabs, you can go to Cabela's or Bass Pro Shops and get those game cameras where if there's movement on a camera, it records. I use them personally to look for Bigfoot. But if you want to get one of those cameras and install them at your work sites, so when you're not there, if there's movement at your site, cameras catching them. They can be very indiscreet. It can protect you quite a bit. I believe in the movie The Accountant, Ben Affleck also had some cameras in his backyard, and I thought that was a really good move. And as an accountant, I connect with Ben Affleck in that movie, and I've got secret cams everywhere too. I just want to
Ben Affleck, the accountant / trained killer.
Well, we wear multiple hats. We have to.
Yeah, he's got a license to do some accounting and a license to kill.
So Mark's the real accountant.
All right, what do we got, James?
We got Michelle Grace Hoddle. I'm an architect. Is it better to lease or buy an SUV or a truck for my business? I primarily drive to meetings and job sites, but I am getting more into the construction side of things, including my own home office that I am building as an ADU. So is the truck the better way to go? ?
Well, I got some thoughts on this, Matt. But
go for it.
Is that all right? Okay, this is one of my 7. Now, everybody disregard, Michelle, bless your heart. You were saying we're doing this business and ADUs and all that. I love it. That's great. But the real key word in Michelle's question was, should I lease or buy? Okay. She also threw out SUV. So there's 2 issues, lease or buy, big truck, little Subaru. If you're going to go with the bigger truck or SUV because you need that space, that's a good economic decision. You're going to get a bigger write-off. Cool. If you lease versus buy, the lease payment write-off is fantastic, and you get the lease payment plus fuel, repairs, and maintenance. I hope you don't have maintenance with the lease. That's a crappy lease. But if you've got a lease, that's great write-off. The only problem is mileage limits. Be very, very careful with those mileage limits because a lease can bite you in the butt on the way out. So most of my clients that are doing a lot of real estate, they're on the road, they're racking up miles. If you know you're going to put in over 12,000 to 15,000 miles, stay away from the lease, just buy, get the bonus depreciation, go for it. That's my thought, Matt.
Yeah, I like the lease if maybe it's a second car for you. You have another car that you drive a lot, and maybe this is like, I need a little nicer car to roll up at for my brand, or maybe you're going to sites where you want to look a little more professional, but you got your kind of day car. But that works nice because you can have 100% business use of that. You're writing off the lease payments and everything. You're not hitting the mileage limits. So sometimes if it's a second car for you, it could be a great option. But remember just think about for mileage, if you're driving 20,000 miles a year and you're getting 62 cents a mile, I mean, that's $12,000 in mileage reimbursement. That's got to be over $1,000 a month lease payment. So if you're a high mileage person, don't do the lease, look at the numbers. But I like the lease, lower use, also for the people that do it as a second car where it's 100% business use.
Love it. Just taking a moment here to sharpen my snowshoes. I want to make sure that I've got enough grip when I'm out there walking the dogs in the deep snow here.
Careful.
I will say this again, folks. If you're enjoying this, if this is the most fun you've had learning tax strategies, freaking share, subscribe, like. We need you. We love you. We're trying to change the world one tax return at a time. We need you. Get out there. Give us some love. We appreciate it. Okay, James, next question. I'm going to finish this last spike on my snowshoes here.
Awesome. We've got Peter Y. I purchased a vehicle 2 years ago. I got bonus depreciation. When can I purchase another vehicle to take advantage of bonus depreciation again?
All right. Well, Peter, right?
Yeah.
This is a hard one. Okay, everybody. See, with every good thing, sometimes there's a bad thing. There's yin and yang. There's good and bad, happiness, sadness.
Is this the lump of coal? What is this? What are you about to serve up?
Should I serve up some naughty here? Okay, I'm going to be naughty here. I'm going to serve up some. Peter's not going to like this. So here's the thing, everybody. When you go and depreciate the crap out of that SUV or truck, so when you go to sell it, you have to recapture the depreciation that you took over the sales price of when you sold it. So let's say, okay, let me give you an example, everybody. So let's say I buy a used truck, 40 grand. You're very careful. You went out and bought a used truck, 40K. Used it and you depreciated the hell out of it. You wrote off all 40 grand. It was 100% business use, let's say. I'm being naughty, so I can swear.
Yeah, this is naughty mark, so that's okay.
It's naughty mark. Yep. Okay, so you wrote off the whole freaking $40,000 truck. 2 years later, you go to sell the truck for 20. So you sell it for 20 grand. Well, you've got to recapture depreciation, and your basis is zero because you've written off the whole darn thing. So when you sell it for 20, you have to recapture that depreciation because you didn't use it up yet. You hadn't used the useful life of the car yet. You got accelerated depreciation, even though you haven't used the truck to drove it into the ground. You didn't drive it into the ground in zero. You sold it for 20. So it says, whoa, you depreciated that 20. We want that 20 back. Now, that's not a bad thing. You got an interest-free loan from the IRS for 2 years. I'd rather get a write-off for 20 grand this year and give it back 2 years from now. I have no problem with that. That's a good thing.
Let me just interject. If some of you don't know what the heck recapture means, that means you now have 20,000 of income. Mm-hmm. This is coming back in as income to you. So we gave you 40,000 of expense. You'll only use 20,000 of expense because you ended up selling it and making 20 back. So the 20, when you basically sold it or traded it in, even when you say recapture, that's income, taxable.
Yeah. Remember, Matt said that. I'm the good cop. Matt's the bad cop. Okay. Now, here's the thing. Now, let's say Peter says, well, I've had the truck for 2 years. Business is good. I want to go out and buy a new truck. Cool. He's going to go out and buy one for 50 grand now. So the IRS used to let you do kind of a 1031 exchange where you could literally take the truck you sold now and roll it into the new truck. That's gone now. That was gone under the Tax Cuts and Jobs Act. So what you have to do is claim that $20,000 as recapture. Then you can go out and depreciate the new truck for 50. Now, with that new depreciation of 50, 20 of it is going to offset the 20 here. So at the end of the day, you end up with $30,000 of write-off. So if you go out and buy a new truck greater than the price of the one you sold, that's going to be a depreciation that you can take right now. But you're going to have to offset the recapture with the depreciation on the new one up to that amount. So it's not the end of the world. And you know what I want to tell you? Go out and get yourself something real nice. That's what I'm thinking.
Yeah.
All right, James, what do you got?
All right, we got Ryan Riggy Lee. What if I buy a car in my personal name, but lease it to my business?
Whoa,
is that a write-off?
Whoa.
That's a train wreck, not a write-off.
Yeah.
I say this. Okay, This is one we hear quite a bit. This is probably from a place similar to the one that says, buy a business for personal use and put it in your, or buy a vehicle for personal use and put it in your entity, and now it's a write-off. No. Okay, when you lease something like equipment, like a vehicle, you pay sales tax.
And you've got to claim the income on the other side.
Right, it's a wash. You're just expense, income, and what did I pick up in the process? It's the same income at the end that's taxable if I'm doing it to myself. And in most states, I've just picked up sales tax, which applies on leasing of equipment. So, or personal property. Don't do it. No legit person is doing that. That is not a legit strategy. Sometimes it sounds cool, or somebody that thinks they've like got some like novel ideas, like, ooh, we'll just lease it. No, don't do that. It doesn't.
Yeah. The answer
is you don't need to. If it's used for business, it doesn't matter.
So don't worry. We got an escape hatch here for you. If any of you out there that have a side hustle and own a vehicle personally, you can still write it off. You don't need to have it in the business. You don't need to lease it to your business. You don't need to transfer it to your business. Just choose mileage actual. That's it. The IRS is cool with that. Just be able to show us that you use that vehicle for business and you're good. Don't do the leasing. Don't need it. All right, James.
So this one is regarding, I'm assuming, the LMS. Is there a list of CPAs or firms that have gone through the certification course previously mentioned by another ? If so, how can someone access this list?
Okay. Oof. We call it LMS, meaning Learning Management System or software. So we have been building for the last year 80 videos in 12 modules. I've been behind the camera here with this background in December, wrapping up some last videos. I've been in the studio all year. We've got exams, white paper, everything on it, then the weekly trainings to supplement it. So any of you out that are a tax advisor, get over to markjkohler.com. And let's get you registered, get you some leads, get you some resources, get you a community, get you a tribe. It's very, very affordable. And I'm discounting it by $2,500 between now and January 1st. Price goes up January 1st. So if you want to get in on the front of it, this is the pre-launch pricing. markjkohler.com. Now, for any of you that need an accountant out there, the new certified people have not come off the shelf yet. I'm training them come January 1st. I know I'm going to have people ready to go by February. If any of you are looking for an accountant, be patient. Keep following. Sign up for our newsletter at our law firm site. Sign up for the newsletter on my site, Matt's site. When those new accountants are certified and ready to go, you're going to get a ping. So you'll go to markjkohler.com, and there's already a part for it. It's called this MJK Certified Tax Pro Network. You put in your name and say, as soon as there's someone certified, I want a ping. We are capturing your info. We will send it to you. I don't make any money off of those accountants. I just want to certify them and get them out there to the world. The law firm will be a support to them. Our directed IRA company will be a support to them. Our Main Street company doing company maintenance will be a support. We're not going anywhere. We'll be in the background helping those certified advisors help you. So just come look at my site in February, sign up for my newsletter, and we'll take care of you, people. It's going to rock. And these accounts are going to be all over the country. So next question.
So excited. Love it.
Woo, is it going to be sweet?
I'm excited for it.
Right on. So this one isn't auto, but I think it's interesting, okay? And I think it needs to be answered. From KJ, question.
Is eggnog a write-off? Yes. As you buy eggnog in the holidays for your board meeting, this eggnog right here, this is a write-off, people. 100%.
Yeah, 100% for 2022. You know, if it's for entertainment, you know, the little meals and entertainment, it's going 50% next year. Keep that in mind.
Yeah, James, that was a great question. Eggnog is a write-off. Okay, next question.
When we buy a piece from KJ, when we buy a piece of property and as we build our home, I'm assuming the home on this property, okay? And starting a business within the house. Okay, there we go. Is that a write-off? Question mark, question mark, question mark. All caps.
You want to take it, Matt, or I can?
Well, are you living in the home? If so, no, it's not a write-off. You might have a home office deduction coming down the pipe, but if you're living in this, no. Now, if this is just a business location, absolutely. This is the warehouse, the retail store, the office for the business, great. But it sounds when you say home, I presume you're living in it and having a home office. So home office deduction is likely your best route.
Yeah, and I would say this to anyone: if you really want to create if you're building a place and you really want to create and carve out a better write-off for yourself, home office is your fallback. You'll always get the home office if you have an office in your home, whether you build it new, buy used, whatever. But if you can build a separate structure, a casita, a separate entrance, you want to really carve out a space on that property. I have a lot of clients.
ADUs are popular, accessory dwelling unit.
Yeah, the accessory dwelling ADUs in California are a big deal. They're catching on everywhere. And I have a lot of clients that do a little hair salon. They build on that to their home, and that creates a bigger write-off than just home office. So here's what I do. Matt and I are a big believer in this. Everybody, okay, you want another investment, wealth building, legal strategy tip? If you need commercial space, build your own home, have a home office, that's cool. But never rent from someone else. Your best real estate investment is always your first property to rent to your business. So if you can get into a strip mall, a condominium space in a bigger building, even a standalone facility, a warehouse that has storage, when a business owner catches on, why in the hell am I paying rent to someone else or trying to squeeze into my home with all this material and garage space and basement and bleh? Go out and shop for commercial property, put it in an LLC and rent it back to yourself in your business. Now that's a write-off. I don't want you to rent your car back to yourself, but I want you to rent that building to yourself. Maybe you can create some additional units for some other rental income. Matt's done this. Yeah, Matt, any thoughts?
Yeah, I mean, Mark and I have done this on a couple properties. We have businesses where we're the landlord owning the property, getting the appreciation, getting the cash flow. We're also the tenant paying the rent, which we are going to be regardless. We're going to be the tenant. We need the office space. We need why don't we just be the landlord too? So that's the game.
Love it. All right. Maybe 2 or 3 more questions. Please, everyone, if you're loving this, give us a like, a share, a 5-star, whatever. Oh, and I should said this at the beginning. Darn it, James, remind me constantly. People avoid all that Facebook crap and the bots talking about some Bitcoin crap. I do not comment during my own lives. And anybody out there trying to get you to click on something for some Bitcoin crap, it's a bot. Avoid it. I think most of you are smart enough to avoid those. Please do. Okay, James.
Well, we got Adam Johnson. We bought a bumper pool trailer this year, which we rent out in our area. How does RV apply? And good question would probably be, do they use it as personal use also?
Well, here's the thing. We love Turo. If any of you haven't checked out Turo, it's pretty cool. And that's
I don't know if they allow rentals of our bumper pool trailers on Turo, do they?
Oh, I don't know. I'm just saying in general here. Let me bring it around. Yeah, So first, Turo is awesome. If any of you haven't seen it, Turo is where you can rent vehicles from other people. It's like the Airbnb of vehicles. You buy a vehicle, you can rent it to someone else on Turo. That's a business vehicle that you're going to be writing off. You might use it for personal and then write off the business use percentage. Well, the same thing applies to the RVs. There's RV rental pools out there where you take your RV and put it in a pool and it's rented when you're not using it. I love that. It's the same concept as Turo, where if you rent it, now what the IRS does is it looks at your available rental days for the year. So if you put it in a rental pool for the whole year, then if it's available throughout the year to rent, then you've got a denominator of 365 days. Then if you use it just 30 days yourself, then that's 10% business use, 10% personal use. So what you do is your denominator is it's available for rent throughout the year. Then you say, what are my personal use days? You may say there's 0. Well, then it's 100% RV write-off. Everything, depreciation, the whole 9 yards. But if you have any personal use days, that's the numerator. And you divide it by 5, 10, whatever, divided by 365. And then that's your personal use percentage. Then everything else you can write off. Good to go. Pretty straightforward. Next question's for Matt. You had no comment on that one. That's good.
Yeah, okay. We're in the rapid fire round, so I'm trying to,
Oh, now you're in the rapid fire round. Okay. Unbelievable. I need a swig of eggnog. That was a little too much.
Well, first you got a bunch of thank yous for all of your answered questions.
Oh, thank you.
Just wanted to
thank
say
you, everybody, for being here.
Can we move on to the next questions? RV
related. We're ready. We're ready to roll.
It's almost along the same lines. Working my Amazon business from an RV while traveling and making some stops for business purposes. How much?
Oh, if you could only wish it so.
Yeah, okay. I don't even know if you can do a home office from an RV. Do you live in this thing? What is this? You're driving around in an RV, making some business stops. Okay, I got some business use there, but the Amazon store, I guess I don't know what the question is. You could have some mileage.
Let me hit it, Matt. And I speak at the RV conference every year. I love my RV crowd, and that's one of you, and I love you. Make sure you're on our next call with the RV inspectors, the RV repairs, or work camper. I'll take care of you. Steve and Coop, we love those guys. If many of you didn't know, there is a full-on other community out there of people living in their RVs full-time or hitting the road for months on end in their RVs. Once an RV is your primary residence, the only thing you can take is mileage to get to any new business location. That's it. If the RV is your primary residence, you're going full-time RV and you know who you are, mileage to the next business location, that's all you get. You don't get home office. You don't get that. But you know what you saved? Sticks and bricks. You're not paying for a freaking house anymore and utilities and property taxes. You went on the road. You became a gypsy. That's cool. Enjoy the ride. But you're not riding off the freaking RV. Now, for some of you that say, well, Mark, I kept my sticks and bricks. That's relating to the 3 Little Pigs. If you need to, I can go through that. But if you keep your sticks and bricks and then drive an RV for business, to go to a business location and do inspections, repairs, work somewhere to work on rentals, whatever, then that RV can be 100% write-off because it's now a business vehicle. It's a business trailer. That's going from your home to a business location. But I hear this all the time. Mark, I'm writing a book, and when I'm in a chalet in France, I really feel it, and I'm in my zone, and I can really write. I need to write off that rental in France because I'm on location working on my book. And that ain't happening. I don't care if you're feeling the love, writing in your RV, working on your Amazon affiliate business or whatever you're doing on Amazon. Just because you're in the RV working on Amazon, not a write-off. Just because you're in that cabin in the woods working on your book doesn't make the cabin a write-off. You have to have a business meeting, a business purpose, a business thing. Because if I can write my book or work on Amazon at home in my garage, then the RV ain't a write-off. So people think about it's not, you got to have a purpose of a relationship, a meeting, a project, hands-on something. Just working your Amazon online business in your RV does not make the RV a write-off. Next question.
Okay, so this one is not auto, but this is from one of our regulars, West Coast Longy 85. Hello. Aloha from Hawaii. I have an Amazon business and was wondering, can I write off all the inventory I purchased in 2022, but only sold 75% of it? Heard you can write it all off. Mahalo.
Well, doesn't this have to do with like the accounting method they're using, accrual or cash?
It does.
And inventory
Accrual
becomes
or
tricky.
cash. The general rule is no, you don't get a write-off for inventory you haven't sold. Most inventory-based businesses are required to go onto the accrual method. So what you do is you look at your inventory at the beginning of the year, whatever that balance was, maybe it was 0. You bought a bunch of stuff during the year, and then you look at what's left on the shelf at the end of the year. This is why many of you right now during this week, if you go hang out at any retail store in the middle of the night right now, shopping at last minute, you're going to see people going around doing little counters, and they're counting inventory on the shelves so they can figure out what inventory wasn't sold before year end. So you have your beginning inventory and your ending inventory. And then you take your purchases and you subtract your purchases in that mix of beginning and ending, and it comes out with what you sold. Whatever's left on the shelf is not a write-off. Now, that's the general rule. And I'm going to say, and I know there's some accountants listening here. Well, Mark, there's an exception for this. And if it's under a certain dollar amount, if it's under that, I would say it's more of an exception to go on the cash basis. And I would work very closely with your accountant and make sure that they sign your return and they stand behind the method they recommend, and that you qualify to get out of accrual. So what you want to do is so if you've heard it's a write-off, that ain't good enough. Meet with your accountant. If you're looking for a certified tax advisor, come January, Feb, we'll have them ready for you. File an extension if you need to in April. It's no big deal. We'll get you an advisor in the spring. But you need to work with your accountant and look at the exceptions you might qualify for. All right, for fun, one last question, James.
Well, I was wondering if we can give some books away.
Oh yeah, let's give away some Christmas presents. I know.
Why not?
Forget about that.
I'm getting ready to hit the slopes, and so we need to get rolling here.
I got a little upside down.
They go the other way.
There's a quick question from Merle again.
Those are some nice goggles.
If you want to go with this first, and it's a real simple question, so if you can just fire away on this one.
All right.
Merle Tirado again. Can we declare our gas receipt for travel aside from mileage to check on our out-of-state rental property?
No. Yeah. Mileage takes into account your gas. So you only track your receipts for gas or repairs, insurance, if you're doing actual. If you're tracking mileage, mileage takes into account gas. So you don't get it right off the mileage plus the gas.
Love it.
Now, here's one for you, though, that's important. Let's say you are traveling for business, but you get a rental car. Now I want you to track that gas receipt that you used to fill up the rental car. Obviously, the cost of the rental car is a write-off too. But so that's a little one where maybe if you're used to doing mileage, you got to actually keep those gas receipts when you're getting the rental car.
I like it. Great comment, Matt. And that's if you're using Turo, a rental car agency, or you might be doing Uber. You know, Uber's 100% write-off when you're out there on the road doing business too. To go visit grandma and have your board meeting. Some of you getting off the plane in the next 4 days and you're going to go visit grandma? No. You're going to visit one of your board of directors and you're going to have a meeting with grandma. So your airfare and your Uber to go visit grandma is a write-off, maybe even some food. Take her out somewhere real nice. But that is a write-off, people. Okay, James, give us 3 or 4 names. You win the tax and we're going to give away, let's see, 4 of Matt's books and 1 of mine. It sounds like a good deal.
Yeah, that's definitely, you're definitely in a giving mood and here we go. Self-directed IRA handbook.
Okay. 2 of each, 2 books of each. Let's do it. We can't hear you, James.
My apologies. We're going to have to do 5 because you said 5.
Okay, 5. All right.
They're going to hold you to it. You know, if we stand in front of the court, that's what they're going to say. First one I want to give away is KJ.
Okay.
All right.
Our second book's going to go out to Merle Tirado.
Love it.
That third book's going to go out to One Casual One.
Okay. I love these handles.
right? The next one's going to go out to Michelle Grace Hoddle.
Okay.
And the last one is going to go out to Riken Patel.
Okay. Folks, if you want a book today, you need to email Diane, Dianne, 2 N's, Diane at markjkohler.com. Email Diane and say, I want a book on the broadcast on the 22nd, and I need my book, please. And she will verify that your handle with James and get you that book. We'll sort those out between Matt's and mine books and hook you up. I was hoping we'd get Chicago Pinup a book, but if we're not giving any credit to creative handles, so we'll just leave it at that. So
well, we're definitely gonna give Chicago Pinup a book today. So we can add that to the list.
6 books. Yeah.
Must have heard that when they win, because if you're gone,
that was
now,
a bonus.
Yeah,
that was a bonus.
All right. Well, happy holidays, everybody. Thank you so much for being here. We're grateful to be a part of your lives. We love small business, love the side hustle, love the big business, love to save taxes, asset protection business, self-direct your IRAs and 401ks, get Wall Street out of your life, get Main Street into your life. That's where the money's at. That's where wealth's really built. And that's when you take control of your own destiny. We're so grateful to be a part of it. Matt, any final words of wisdom and take us out?
I was just gonna give you, the last tip. Since it is, that holiday season, I just wanted to leave this last tip. Remember, guys, the best way to spread Christmas cheer is singing loud for all to hear. So, don't be shy. Sing some, get out there, sing the Christmas songs.
I don't think I've ever heard Matt sing, so I really appreciate that tip.
Yeah,
that's good.
Yeah, I'm gonna surprise you.
Okay, now, James can throw down, everybody. James has got a band. He's got his own production studio. This guy's legit. We ought to have him perform one of these days. Can you sing us a bar, James? Right now, nothing.
A bar.
Are you singing at a bar this weekend, or sing a bar for us?
Yeah.
Stay tuned. We'll have some jingles coming soon.
All right. Okay. Thanks, everybody. We'll see you next week for another live right before the new year. See ya.